Private equity is back in full force with Bain Capital's acquisition of Apleona Group from PAI Partners. The deal is reportedly worth around 4 billion euro and signals growing momentum in PE exits. Apleona is a major facilities management player with more than 43,000 employees across 30 countries. The company offers stable cash flows, making it an attractive target for private equity and beyond. PAI previously shelved this sale 2 years ago due to low bids, but the improving market conditions and a narrowing bid-ask spread has revived the transaction. This fits a broader trend of PE firms accelerating exits, particularly via secondary buyouts, as they seek liquidity to return capital and raise new funds. With IPO markets uncertain, these transactions are playing a critical role. Now, as we've discussed before, creative deal structures are also helping bridge valuation gaps. And we've done a couple of videos and shared several blog content on creative structures in M&A transactions. So for Bain, this isn't just about scale. Obviously, 30 countries, 40,000 plus employees. It's a strategic bet on high recurring revenue businesses. Facilities management is resilient to economic cycles. If you think about it, you have to maintain the asset. So that those businesses, those service businesses, maintenance businesses continue on. Bain has an operational legacy that is, second to none, frankly. Their operational expertise could certainly drive even, enhanced efficiency in Apleona's business. Now going back to how I think about deals, even if they're not healthcare sector specific deals, the healthcare sector, stands as a beneficiary in certain ways. When you think about hospital systems, clinics, medical offices, they rely on efficient facilities management for seamless operations. So although Apleona may not have healthcare as their, beachhead or the primary market, I think there's other facility management companies out there that could be, frothy targets for PE. And healthcare relies on seamless operations, cost control, and regulatory compliance. All those things tie back to facilities maintenance. If your facility, doesn't pass an inspection, you might not be regulatorily, speaking, able to operate and generate cash flow. So long story short, if Bain applies its optimization strategies, we could see improved service quality with Apleona, better cost structures, and potential expansions into healthcare related infrastructure. So this deal, let's fast forward a little bit. This deal underscores a renewed confidence in European M&A specifically, in sectors with stable fundamentals, and it highlights private equity's increasing role in healthcare services and infrastructure. So, going forward, let's keep an eye on not only the healthcare supply chain, but healthcare services and healthcare infrastructure. And I have previously mentioned that data centers and energy transition themes globally and broadly impact healthcare. Whether you see it now or not, I truly envision services businesses, specifically facilities maintenance, to only become more valuable and generate higher levels of free cash flow, particularly when you're servicing or maintaining high value assets. And frankly, we haven't seen assets valued as highly as, let's say, a small modular reactor. You think about like a CT scanning instrument or high value healthcare assets now that are in healthcare facilities. If they were to rely on nuclear energy, for instance, or have their own on-prem data centers, those assets are worth multiples of anything that they currently have, and they'll be spending quite a bit on maintenance. So long story short, really frothy area of the market. Let's stay tuned together.